Well, good evening, afternoon, and morning. Very early morning, everyone. Welcome to Crypto Tonight. I'll talk to Chun Ep2, Crypto Mining and Derivatives. It's a big show tonight. Please join me welcoming our 9 fantastic guests of tonight. People often say you can hardly make a good show with so many guests. So, well, let's make an exception tonight. First, brief introduction. Start with Chun again, the co-founder of Ep2 Pool and the founder of Stakefish. Chun, please.
Thank you, Yama. This is the second of this series, so welcome and maybe I'll go back to Yama.
Too brief. Chun, how was your weekend holidays in Busan? Enjoy the beach there?
I can't wait to come back to Seoul.
Really? Have you ever watched a very interesting zombie movie called Train to Busan? It's a scary movie.
There's a lot of, I think, hopefully the coronavirus won't turn normal people on this.
Okay, thank you, Chun. Next,
I try to keep social distance with everyone on the train.
And then you keep traveling on the train. Thank you, Chun. Next, Jason, the CEO of BTC.com.
Hi, this is Jason from BTC.com. BTC.com is leading a Bitcoin mining pool and a Bitcoin blockchain explorer. We're also expanding our service. So this from last year, we start cooperation with Matrixport. So we're trying to produce more financial products to our miners.
Thank you, Jason. Jason is also my first time to meet you as well. And I read that you actually quit your PhD in the US back in 2012 and then moved back to China, all in blockchain and crypto. True love to Bitcoin. Did you buy any Bitcoins back then?
Sorry?
Did you buy any Bitcoins back then?
Yeah, I think even in 2011, I bought actually a lot, comparing with, I actually bought a lot in empty gox.
Okay.
And I started trading back then and lost a lot of money back.
So you bought them and then you traded and you lost them?
It's not about the issues of empty gox, just I started trading. I don't have much experience, so I lost money even in very low price. So if you try to keep all these Bitcoins, and that should be a lot.
So good. Tonight's show, you're going to meet a lot of professional traders. Cool. Thank you, Jason. So next, moving on to Ethan, the co-founder of Luxor Mining. Hi, Ethan.
Hi. Thanks for having me on. Yeah, so my name's Ethan. I'm the co-founder and CEO of Luxor Mining, North American-based mining pool and hash rate operator. These days, spending a lot of time on the financialization of hash rate, really treating hash rate as a commodity itself. So excited to talk, further about that tonight. Before getting into mining, my background's in finance, so used to be at Goldman Sachs doing cross-border M&A in Hong Kong.
Nice, Ethan. You're a morning hero. I think it's 6 a.m. for you now, right?
Yeah, nice wake up for me on the West Coast.
Really appreciate it. Thank you so much. Thank you. Now moving on to Daniel, the CEO of Matrixport.
Hi, thank you, Yama, and nice to meet you all today. Great to see a lot of familiar face here. And for the rest, nice to meet you guys. So Matrixport is a one-stop of crypto service company providing lending, trading, wealth management, and custody solutions to customers. A lot of our customers are mining customers because of our roots in Bitmain.
Daniel, I know you rap and you rap well. Buy Bitcoin at it or earn money while asleep. We'd love to hear your version, maybe edit a show.
Next time.
Yeah, or maybe we should organize the industry to host a competition show like the Rap of Crypto. 币圈有嘻哈.
Okay.
And not difficult to bet who's going to be the winner. Thank you, Daniel.
Okay.
Thanks.
Sounds like a good idea.
Thanks. Next, Qian from Blockin Wallet. Hi, Qian.
Hi guys, I'm Qian. I'm from Blockin Wallet, a subsidiary company of Poolin, one of the biggest mining pool, BTC mining pool in the world. And talking about me, my background is I transferred from traditional finance second half last year, and I worked as a sales trader, trading the Hong Kong stocks and China stocks. So basically, I'm trading spot. So but some of my previous clients, they are from the Delta One desk. So I'm got a little bit in touch of the derivatives. So I guess that's why I'm sitting here with you and to listen to you and to learn.
Thank you, Qian. Qian's old friend, but first time here. I hope you enjoy the show tonight. Thank you. Now moving on to Luuk, the CCO of Deribit.
Hi, thanks Yama, thanks for the introduction. Thanks for inviting me again. I work for Deribit. Deribit is one of the top 10 derivatives platforms, but particularly known for our options activity where we are number one. Last Friday we had overall open interest of around 1.5 billion, out of which half of which expired. So we're really focused on those numbers, but also naturally growing them, but focusing on the options suite. So new services, new market makers, improving prices, competition, etc. So options is our niche.
Thank you, Luuk. I just want to say I love your pink hoodies. It's cute. Our busy traders can save time for gift shopping. We
already have one.
Me no. So I was asking, after coronavirus, if we visit your office, or can we or I have a pink hoodie from Deribit?
You can for sure have one. I'll send you one after the show.
That's a promise. Thank you, Luuk. That's why I always invite you in the show. Thanks. Next, Kyle, the co-founder of the Arrows Capital. Welcome again, Kyle.
Thank you, Yama. Really appreciate it. So again, we're a trading firm. I founded it 8 years ago. My background is foreign exchange, and now we do mainly crypto. So we do trading, we do borrow and lending, and we do some investment. So we've invested in Deribit. We like number ones, and they're number one in options by far.
Of course.
So we've done a lot of stuff across the board, even in financial services and trading and borrow and some investment stuff.
Thank you, Kai. Congratulations again on the recent many good news and new partnerships and new investment. How exciting. And a very quick question for you. Why you named your hedge fund the Arrows Capital?
Actually, I studied Japanese a lot as a kid. I started studying when I was in kindergarten. I was 5 years old. And I never got to work in Japan. But when I founded our company, we named it after the founding story of Japan. And basically, it's a unification story where a general had 3 sons. It's a nice story of camaraderie and integrity. So that's why we named it 3 R's.
This is why we also need to be united, stick together. Thank you, Kyle. Next, Emmanuel, the co-founder and CEO of Skew.
Hey, thanks for having me. I'm the co-founder and CEO of Skew. We are a data analytics and trade execution platform focusing on the crypto derivative market. Based out of London, so yeah, really excited to discuss with you guys about how we can help the mining industry.
Thank you, Manuel. Really like the beautiful, elegant French accent. I just love it. Thank you.
You're welcome.
Now moving on to Darius, the co-founder, the founder and CIO of QCP.
Thanks, Yama, and thanks for having me on the show. QCP is a trading firm based in Singapore. And we focus mostly on crypto. And, like many of the guys here, I came from a finance background as well. And, specifically in FX. So, I knew Kyle and Daniel from back in the FX days as well. And right now, QCP, we focus on a couple of things. One thing is a lot of local market OTC flow. So, we are quite active in Southeast Asia, Korea. And the second thing that we focus on as well is a lot of option strategies. So, we help plan the management of option strategies and trade a lot of it ourselves as well. And we, like 3 Arrows, we've also done some investments, so we've also invested in Deribit, we've invested in Skew, so, all in the family here.
Over here, a quick question for you. What's the best part being a crypto trader and the youngest ever national rugby player of Singapore?
Wow,
wow. Really?
How did you find that out? I think crypto is a great market. I think especially for traders and FX, there are a lot of similarities. It's growing very, very quickly, and everything changes all the time. And I think everyone here can attest to that as well. So very exciting to trade crypto. One downside is that it's 24/7, so it's very tiring. But besides that, and as to how it relates to rugby, I think it's a high energy trading. Kind of
high energy.
So.
That's good. Thank you, guys. So next, moving on to our opening discussion. Chun has some. Maybe you can start.
Also, yeah.
Do you remember last night when we did a crypto derivative show was also in the Ep2 pool office, and you were just sitting next to me, and you're like, finance, no, not really my thing. I feel so far from the crypto, finance. So I guess like you probably would like to know like what like miners or a mining pool can use these kind of financial products for.
Yeah, I think
that's something you would like to discuss, right?
That's right. So, yeah, may I go back to this screen? So, sorry.
Yeah. So, So the opening discussion is actually like as the mining pool, like Ep2 pool or BTC.com or Poolin mining. The mining pool is to make sure the blockchain network is secure, serving the miners. But what can really like miners or mining pool they can use financial products for? And I would like to really hear you financial experts, your point of views and your thoughts. Maybe we can start with Emmanuel.
Sorry. Yeah. Can you repeat the question?
The question is, what miners or the mining pool can use the financial products for?
Yes. So that's one of those where I wanted to discuss with Luuk and Darius and Kyle, and it seems like at the core, the miners they spend dollars for electricity on machines, and they end up with reward, which is Bitcoin. And the problem right now, which is that most of the derivatives instruments in crypto are margined in Bitcoin. So essentially, if you buy a put option to hedge, and these put options make you a lot of money, you end up with more Bitcoins, which you still need to kind of get rid of. So this is like something where I guess we've seen a bit on the future side some effort to start to margin some products in USDT, but yeah, I mean, do you guys see that stuff as like an obvious path for development? I'm guessing like from the perspective of really commercial hedging, that that makes sense if they don't end up with more of the stuff that they'd like to offload actually. But yeah, I think it's quite interesting for to hear what are your thoughts on that one.
Maybe Jason can share your thoughts as one of the biggest mining pool as well.
Well, actually, I think mining pool is quite. I think the mining pool business is choosing very challenging phase right now because all the mining pools are offering their customers with very low mining fee. So I think maybe a few years ago, all major mining pools can hold a lot of Bitcoin on their hands, and we don't know how to make more profit from the Bitcoins in our hand. And also, some miners they just use mining pool as a wallet. They'll just keep like a few hundreds of Bitcoins. Just leave on mining pool for maybe for half a year or even longer. But starting from last year, I think almost every user just withdraw their coins very quickly from mining pool. And so for now, I think for mining pool we don't have a lot of Bitcoin in hands. But for miners, especially some big customers, they do have a habit to. They just, I think, first of all, they want to have a good, healthy cash flow of their mining business, because even for the miners, the margin is is much smaller, and you have to make sure every aspect of your business is to the maximum efficiency. So all these clients, I think they have their own employees to help them to manages Bitcoin or other cryptocurrencies. So for mining pool, we are more like a bridge. So we can we can try to introduce them with some good financial products and try to teach them how to use that. So this is quite a big change. Yes, because the miners are becoming more and more professional. They know what they need, and even for some big miners, they just don't need mining pool to help them to connect. They have their own ways to reach out to their resources. So this I think it's quite different. So I think for mining pools, we do need to try to expand our service. So like we have to. So I think many pools are trying to give a one-stop service. So if you want to start mining, so from mining pool side, we can try to help you from lending, lending USDs, finding the location facilities to host your miners, and try to connect to Matrixport or some other exchanges to help you to maximize your profit. So this is what we're trying to do, just like a one-stop platform.
I think miners already know where to find like Matrixport, right, Daniel? Would you like to share your thoughts?
No, the more the better. We want more people to advertise for us.
Yeah.
Do you have anything to share with us about this? Because Matrixport has been serving the market for quite a while.
Yeah, absolutely. Yeah, thank you. I think your question, first of all, is what kind of financial services is beneficiary to miners, right?
Yeah.
So I think it's a very good question, and I think a lot of people in today's roundtable has experience with that. So from my personal point of view, we think financial products address three problems for miners. Number one, hedging. So obviously, when they have coin holding, sometimes they don't like the volatility. They can sell it out to spot, or they can sell a future to hedge it. Number two, or even use an option to hedge it. Number two, they want to gain some liquidity, release some liquidity from their coin holding. So that's where they collateralize their coins to borrow money. This is a popular business in the past 2 years. And thirdly is they want to generate more returns on top of the coin holding they have. That's what we call the wealth management part. So they want to generate 5% return, 20% return, or 50% return. Depending on what kind of return they're looking for, there are specific products that's suitable for the customers, respectively. So that's my take.
Usually, in your experience, what return usually they're looking for? What percentage?
Yeah, good point. Very good question. I think it's 5% to 15% probably is the 80% confidence interval. I'll say, because 5% are kind of the guys who are like, I just want my coin to be safe. Just give me some money, and the 15% is like, it's I don't want to go for 30% because it's dangerous, but I want to make money but still be relatively safe. So the boundary is 15.
Okay.
And somewhere in between as well. 10.
Okay, it sounds like a good fit to Three Arrows Capital then, right, Kyle? That's what you're offering to your lenders.
Sure. So we focus on borrow. If people want to trade options, I think QCP has a great offering. Deribit has a good offering as well. For us, we focus on more of the plain vanilla like wholesale market. So for us, it's borrow. And borrow is driven by the futures basis trade, so derivative versus spot arbitrage. And I think we're the largest borrower in the world for this kind of stuff. So that's what we try to do. And we try not to get too fancy. We don't look at structured products or anything else. I think there are other people that try to do more bespoke things. For us, it's just the wholesale borrow market.
Kyle, what's the best proxy, in your opinion, for knowing where the borrow is on the current day? Is that the futures basis?
Well, the futures basis is what people can afford to pay. But if you want to know what the bid is, you would talk to an intermediary. So if you go look at like BlockFi's website, that plus like 1-2% is usually where people are bidding. But yeah, I think if you want to map it out like systematically, you would look at the futures basis. If you want to know where like the actual OTC market is, it's going to be agency broker plus 2%.
Interesting. And there have been some innovative derivatives products as well, like hash rate derivatives. I guess Ethan is an expert on this. Would you like to share something with us about it?
Yeah, I'm really excited to see some of these products come to market. At the end of the day, miners produce SHA-256 hash rate. And so that's really the commodity that these machines are producing. So much like oil producers, hedge through the price of oil, eventually miners are going to need to price through the value of hash rate. So I think there aren't that many great solutions out in the market yet, but excited to see how those hash rate based derivative products come out in the future. I think, to Daniel's point on the use cases for miners, I think it really touches on that first one, which is hedging. If miners want to lock in a value for their hash rate, they need to be able to hedge the value of their hash rate in the future. So I think it'll really come in handy when miners are trying to reduce their risk, which is quite high. The value of hash rate is quite volatile. It's about 3 times more volatile than the price of Bitcoin itself. So what ends up happening is these miners make millions of dollars in capital investment, invest in all this equipment, build an Excel spreadsheet, it looks great. And then the next year, the price of or the value of their hash rate is nowhere near what they expected, and they go bankrupt. So having these hedging tools, I think, will really push the industry forward and usher in a new era of institutional capital in the space.
Yeah, I think like traditional commodity producers, like Bitcoin miners, would be likely become the largest, like the users of derivatives, whether it's with the future to lock in price or options to hedge against losses. And I think, Chun, are you convinced a little bit more now, like why we need crypto finance, or still not buying the idea? Nine of us are trying to trying to convince you to adopt the finance idea for the Ep2
I have no idea, sorry.
Here,
okay.
Chun, I have a question for you. I prepared a question. So everyone here is talking about the financialization of miners, mining pools, what financial services can do. Miners have been around the longest. You guys have been in crypto way longer than anyone else here. What can we learn from the mining side or the mining pool side?
I actually haven't mined for many years, so I think I probably will use the mining financial product because I feel myself like more comfortable with like holding the private key myself, and I don't even use the exchange so much. So so not your key, not your coin. So that's what I believe in.
I guess maybe Jason would be good to answer this question.
Yeah, actually, I think for the mining for miners, I think for miners we are learning from financial markets very actively from maybe from last year or even a few years ago. But I think actually I think we are learning from your side. But to me, I think for comparing with cryptocurrency with a traditional financial product, I think the major difference is first the price can rise and drop very significantly, and that's way much comparing with some traditional products. And also the risk is very high. You have to make sure your assets is safe. There's no way to get it back if it's stolen or some bugs, especially for like smart contracts, DeFi things. If you have bugs in the code, you also lose a lot. So that's quite different from traditional marketing. So you have to be very careful about your assets.
Yeah.
Just like Chun said.
I think the thing is
so
like
you have to.
I mean, I think mining still is a very good way to if you want to long Bitcoin. So it's like you get if you have some mining machines, like you have to buy Bitcoins every day in small amount and keep buying for I think nowadays is the return investment more than 1 year. It's like mining force you to buy Bitcoins in a term lasts more than 1 year and every day and in a small amount. So if you long Bitcoin and believe in Bitcoin, then without this someone force you to do this every day, then it's quite hard to hold the Bitcoin in long term. You maybe after the price back is you're gonna sell your Bitcoin and you know it's like someone force you like keep buying and ignore the price up, price down. You keep buying that amount.
Actually, on Chun's point, you know, one thing that we've seen is guys who are using put option selling as an alternative to mining because it's actually pretty much similar, right? So
I only got a little bit of furniture that if I didn't operate a mining pool in the earlier days, I didn't operate mining machines, then I probably missed a huge opportunity in this, more than 1,000 times the price rallies in the crypto world. By operating mining pool or by operating mining machines, you always have some opportunity to come back.
Okay, got it. Okay.
Perhaps one addition. We're talking a lot about the mining specific issues, hash rates and that kind of stuff. That's really like miner specific. But overall hedging of income or yield plays, like Darius referred to, it's actually much bigger than the mining space because there's more and more companies in the space we're operating in that get paid in Bitcoin. So like us as a platform, our revenues are made in Bitcoin. A lot of the other platforms, borrowing and lending, all of that is every one of them have the same issues as miners essentially. Their current and future income will be based on the price of BTC or Ether or whatever the coin is. So hedging of future income becomes more and more important. So what we've seen at Deribit at least is that more and more of these firms are entering the space. Even our competitors use our options to hedge their own future income, which is still in the beginning stage. But I think this hedging topic and how best to do it or how to generate additional yields when your income is made in BTC is much bigger than the mining space alone.
I think.
So Luuk, what?
Sorry.
What do you think then if some guys are hedging the bitcoins, right, with puts, but then if the payoff is delivered in Bitcoin,
it doesn't really match. You need to hedge that exposure by shorting whatever perpetual. But what we plan to do soon, and I hope in a month's time, is launch tether-based products. Initially the perps, but then later other products like options, because then it gets more predictable. So tether-based options. Another thing, what we're also planning to do is, if especially the miners or everyone in that has like daily income in BTC, they like to hedge using Asian options. It might be too specific for this show, but that's like a variable strike, which needs a daily price point. And to facilitate that, we're looking at trade at settlement, so TAS orders, which is locking in a certain value per day, allowing guys like Darius to facilitate Asian options. So there's a lot of stuff that can be done. But first of all, Emmanuel, you're right. It doesn't really work if the collateral is in BTC as well.
But Emmanuel, I think, further to your point, right, there are actually two concerns that a lot of these guys, a lot of normal investors have. So like, as you said, the first issue is the convexity where, you are doing a BTC option, you're earning premiums in BTC, you're paying premiums in BTC, so you have the convexity. The second thing is also the settlement, right? A lot of these guys, they are unable to deal with cash or coin settlement. So they prefer physical settlement, and I think that's something that we deal with. A lot of our clients, they deal with us because they want to earn. They don't want to deal with the complexity, and also they want to have physical settlement. And so I think Deribit, as an exchange, it's probably more difficult to do some of these things. But as an intermediary, we do help out with some of these issues.
Yeah, I think in general, just like from my observation from the Chinese community here, it's like because there were so many like coin fund, hedge fund before in China, And it's like the miners, they try to trust or believe a little bit in this kind of funds, and then they gave their coins to the funds, and then the funds just lost their coins and then disappear or vanish or whatever. I think miners are hurt. It's not like they do not want to use it. I mean, they did try to use it a little bit, but a lot of people got hurt. And then it's like, I think in the space we need more really experts and education definitely to the mining side. Yeah, that's why we need more people like you guys. So thank you guys. So now let's moving on to our next session called You Ask Me. So let's start with Daniel. You may ask.
Oh, okay. I think I have a question for Kyle. That is, you guys do a lot of I think you guys do a lot of arbitrage as well, right? Across venues, on interest rate, through spot future, perpetual, and also the lending markets. So my question is, arbitrage on spot markets is pretty straightforward because you just arbitrage price and move the inventory, and then everything is cleared. But on derivatives, no matter it's future or options, when you arbitrage the prices, you cannot really move the inventory, right? So how would you tell people who was not professional in doing this how to manage the risk when you arbitrage across derivatives across venues?
Yeah, good question. Appreciate it. So I agree that there is a risk. If you have a long on one exchange and you've hedged with a short on another exchange, and if it's on leverage and the market moves, you're going to get liquidated on one leg, right? So it's very important to understand what your risks are. And I think that's why the market is maturing now, such that I think there was a time when basically anyone would do spot arbitrage in 2016-17, right? And then maybe 2018-19, anyone would do spot versus futures arbitrage. I think all of these are getting more competitive. To the point now, like if you want to participate in this trade, the easiest way to do it is lend to someone who's already doing it. Because if someone else is already doing that trade very efficiently, it's true. If someone's already doing this trade very efficiently, then I mean our edge is not what it used to be, basically. In the same way that it's not for other products as well. But yeah, basically, I think a large trend in crypto is specialization. There's options trading firms that specialize in options. There's basis trading guys that specialize in that and borrow. And it's no longer like a Binance one-stop shop. That just doesn't exist anymore. Now you've got options firms where, Deribit just dominates. They have like 90% market share. There are other people that build on top. Liquidity is tranching. Basically, a large trend in crypto this year, I think, is specialization and tranching of liquidity. So the guys that are good at options are good at options. The guys that are good at spot futures are good at spot futures. The guys that are good at borrow are good at borrow. It's no longer the universal, everyone's good at everything. And I think that's going to be a larger trend. I think there will be people that specialize in a certain client base for sure. So maybe someone can service miners really well. And a mining pool is very, very well suited to do that, by the way. Instead of everyone taking their coins out as soon as they mine them, why not just keep them there and have them do other services, right? That makes perfect sense. But I think if you boil down to who is servicing each one, it's unlikely that is going to be one entity. I think that's likely to be tranched. And I think the players here are all good at a certain area there.
I think Poolin already agreed with
sense.
You. Right, Qian, already.
But Kyle, sorry, I just want to add something to your point about, and specifically with regards to borrow lending, the thing that you guys do, right? That there is a segmentation within the borrowing lending space that I think isn't clear to a lot of people, and which I think should be clear. That there are guys who are more responsible and guys who are irresponsible, right? You have guys who are doing many levels of rehypothecation, and then there are guys like you who have prop trading on the back of it, and one being safer than the other. And the credit risk on each is completely different, actually. I think that's something that most people don't realize, and maybe want to talk about that as well.
100% agree. And people started to realize that after March 12th. Bitcoin fell 50% in 36 hours, and everyone had to really have a heart-to-heart and analyze who are they lending to. Because I agree with Chun's original point. If you wanted to lend to people when he started, you would have lost all your money by now, because that would have not worked out very well for you. So now, now the market has really matured, and there are ways to analyze credit. And so you get, for example, we're like a regulated firm, 8-year track record. We can share a lot of details on that. But people have done this analysis now, and I think the goal is not to lend to 100 different counterparties. The goal is to work with 3. And yeah, I think basically that it's more about credit, and it's more about trust, and it's more about regulation than it is about diversification in the borrow lending space.
In the very beginning of our mining pool, 2013, maybe Jason used that. We had a term like if you don't withdraw your coin, you don't fill in your withdrawal address, don't withdraw your coin within like 90 days, then that coin will be seized as our coin. So we force you, like you must withdraw.
I know your policy.
Yeah, right.
I really
mining pool like Illegals, Luxurious mining pool is your coin is getting paid in the mine block itself. So you're gonna have to withdraw your coin, and you must use a hardware wallet or some Bitcoin address. You have a private key in control. You can't withdraw to exchange address.
Mm-hmm.
So I think today's landscape and today how people use Bitcoin, today how people hold Bitcoin, at least to me, it seems very wrong. Okay, Jason.
Daniel, you may ask your next question.
No, I'm good. Go ahead.
Yeah.
On the topic of lending and risk, Qian, I wanted to ask a question about Poolin, and know you guys are increasingly looking at the lending space. How does having proper hedging tools in place as a mining firm impact the lending or borrowing profile of miners? If they do have proper hedging, is that something that you look at, and is that something that really influences their credit profile?
Hey, Ethan, thanks for the question. And yeah, well, I think you're saying is true. Miners now are gradually getting familiar with and start using financial products that contains proportions of derivatives. Even some of them got involved unconsciously. So from my point of view, the incremental volume originated from the hedging demands would be a natural counterparty to current market players, which would hugely strengthen the trading volume. First, I mean, on one hand, the trading depths in exchanges will be better and better, and on the other hand, it will reflect on better derivatives pricing, because we have the positive and negative side to for the whole trading pattern. Yes, and for your second question, yes, definitely, in our lending business, we would like to work with clients that already took some hedge measures, and actually we want to provide a package to our clients, just as Jason just mentioned, that one-stop service. Blockin wallet provides this service as well, and we want to serve our client from bottom to top, and in fact we do provide loans with no liquidate guarantee. So yeah, that's part of the combination of the lending with derivatives. Hope this answers your question.
Yeah. Okay. Thank you, Qian. Qian, so now you may maybe ask your question.
Okay. Actually, I have one question to to trading firm. To Darius. Hi, Darius.
Hey.
Hey. Hey. How are you? As an active trading firm covering from spot to futures, and options as well. Are you a believer that derivatives would flatten the fluctuation in crypto trading? And what is your view? And what is your view on the institutionalized trading will eventually erase the significant, abnormal volume, abnormal volatility on Bitcoin trading?
Yeah, sure. I think there are a couple of levels to this question, right? So firstly, if we look at our current climate, or rather the current state of affairs, one of the reasons why Bitcoin has been so crazily volatile is because of the derivative products, the Delta One derivative products. I mean, you have BitMEX, and other exchanges offering very, very high leverage, and that has caused unnecessary volatility, as you can see from Black Thursday, right? So it's more of the leverage that has caused the volatility. But with that said, going forward, if you have very big players coming in as well, like a big hedge fund out of the US, with like maybe they deploy a couple $100 million. That could cause the market to move as well. I think it's more about the degree of leverage rather than actual derivatives per se. So if derivatives are used in a sort of controlled leverage way, I don't think it would cause unnecessary volatility. But specifically with options, I think a lot of the institutions have been looking at options in the space because of the high implied volatility. So the premiums are extremely high. And because of that, they will come in and they will start writing options, selling options. And we will see the same thing that we've seen in commodities, equities, FX. A lot of these writing firms will start to produce yield products, structured products that are based on selling options. And that will cause the implied volatility to drop, I think. So, there is an opportunity in terms of the richness of implied volatility, the richness of options. And over time, I think that would drop. But the underlying volatility, I think, still depends on the amount of leverage given in the space.
Yeah. Okay. Thank you,
Yeah,
Darius.
I think to continue on that front, I think, it wouldn't be too surprised. Like, the majority of the flow should end up being overwriting. I mean, it's the case in, most of the asset class, so just like constant supply of calls. And then you've got this hedging flow that Luuk was mentioning, so you should see the skew steepening. And actually, that's something quite interesting, but we've seen that the 1 month skew, the short-term skew has been steepening and moving in positive territories by quite a bit in the last month or so, which I think might be something that's here to stay, because I think historically you had like this flow which was just call buying from retail, and I think we are moving into something that looks a bit more like an institutional market. So that's interesting. I think one of the points to come back on what Kyle was mentioning is at the beginning in 2017 you could do the ARBs between the cash exchanges almost manually, and then you could do the cash and carry and have a lot of juice on the future basis, like maybe up until the start of the year actually. And now, the kind of growth moves into options, where this is where you tend to, in my view, gonna get like some of those, more kind of obvious opportunities. So I think one of those that I think is interesting, we discussed it with Darius the other day, but it seems like the flows that you see on Ether and Bitcoin are a little bit different. And so it can create like discrepancies where at the moment, for instance, the vol of Ether is marked below the one of Bitcoin, which, I think in normal regime, Ether is kind of seen as more volatile than Bitcoin. So there are kind of things here that are emerging and patterns that can be, a bit comparable to some of the early opportunities on the other products.
Since you mentioned the Ethereum options, it looks like the Ethereum options are quite popular these days, and like open interest size over 200 million already, I guess, and perhaps institutional demand. And I read also like Ethereum volatility is dropped below the Bitcoins for the first time ever. And is it a bullish or a bearish development? Like, what are your thoughts? Maybe like Daniel, you could share a little bit what do you think about it?
Yeah, sure. I mean, it's a very interesting topic. Combination of information has been telling us that vol has been dropping with the substantial volume up, so which suggests there could be a lot of call writers into the markets. And I think maybe Kyle and Darius has more insight on that. But it sounds to me what happens is really quite a few large Ether holders are getting used to the idea of selling calls to earn some yield. So if simply talking about that, I think that first dampen the implied volatility by selling the vols, and then dampen the realized volatility because the market makers are long those options trading gammas. So that's the implication for me. In terms of being bullish or not, I mean, it's hard to say.
Always hard to say. What do you think, Luke? You had the first-hand data.
So we see the trading activity and we know who's responsible for it. So it's
and you're our guest tonight.
One of them is here. It's a topic media loves. So it's I think where Bitcoin was 2 years ago in terms of open interest, ETH is showcasing the same trend. But a few firms are really active in this space, and it's. I think personally, it's the reasons are twofold. One is a yield play, so simply ETH holders generating additional yield by selling some options, and two, I think it's the ETH the 2.0, the new the staking expectations, where people expect a bullish trend for ETH and therefore more interest in ETH options. So I think it's twofold. But overall, we see more activity, more people entering the space. So perhaps also based on the success of Bitcoin options, they're looking for like the younger brother as the next step. It's less efficient as well. So if you look at the number of market makers active in the Bitcoin option space versus ETH, it's simply less efficient. So there might be more price opportunities as well in a less active market. Even though it's growing, it's still not the same liquidity quality as BTC itself.
Mm-hmm. Actually, I think Kyle sort of touched on the answer for this earlier. That this surge in Ether option volume, the trigger was Black Thursday, because guys realized that these are big ETH holders, and they realize that if they lend it to some of these lenders, the credit risk is actually very high. Whereas they can mitigate their credit risk by actually doing options themselves. So they're able to control their risk better. They're not going to get a sudden default if there's unforeseen. So what we've seen on our side is a lot of these ETH balance sheet guys who hold a lot of ETH, they've been pulling Ether out of lending and putting it into options. And I think that really is the trigger for this surge in ETH option volume.
Mm-hmm. Thank you, guys.
I can add one more thing to that. Actually, ETH has a high borrow rate now. And after the staking, it will have even a higher borrow rate, which means that there's things you can do with your ETH. Finally, like generally, there's been nothing you could do with Ethereum. Now there is something you can do with Ethereum, and Bitcoin also has a relatively high borrow rate too. And what that means is you have a cost of capital. So if you have a cost of capital, you need to be worried about what you're doing with it, and you can actually do something with the underlying. Then you should use options, because if you still want the exposure, options are a very efficient way to have that exposure while actually being active, using and getting yield on the underlying. So it's not either or is my point. It is both, and it is being capital efficient.
Thank you, guys. Thanks. So maybe going back to our You Ask Me session, Jason, maybe you may ask your question.
Yeah, so I have a question for Luke. So last week, there's a lot of discussion because we know we have more than 100,000 Bitcoins settled last Friday. So how do you think with the expansion of the option trading market, how will we see the future of this option trading to impact the price of Bitcoin? How do you think if the market is even growing bigger?
Interesting question. I think it's two answers. One is the market is growing, part of which is caused by more institutional firms entering the space. Everyone is talking about that, but I think if we're honest, it's still very small and only the beginning phase. So the big asset managers, insurance funds, all of them are not here yet. So there's a few active names generating a lot of headlines, but if you look at the actual size compared to traditional assets, institutional activity is really small. So growing of the space will mean new firms entering the space, and typically you would only enter with a bullish view. So there would be net buyers of Bitcoin and therefore having a positive impact on the price long term. So when this will happen, I don't know, but it's a bullish trend for the next period. But looking at the options expiry, it's an often misunderstood concept. So if you look at the size of the option expiry, we had last Friday, our open interest was around 1.4, 1.5 billion, which are incredible amounts, but we're talking about notional. So every Bitcoin, every contract we have, every option sold is equals one BTC. So $9,000, $10,000. So 100,000 contracts means 1 billion expiring approximately. 75% of which was held at Deribit, around 25% at CME, and the rest is spread across a few other exchanges. So 100,000 contracts expired, which is the highest ever for Deribit, the highest ever for the world. But overall, if you look at the in the money or at the money positions, those are fairly limited. So if you look at what people actually were speculating to happen, it's either a very bullish expectation. So last June, people were expecting Bitcoin to be above 30,000, above 20,000, or below 5,000. So if you look at what's called max pain, it's like a smile where when you see the biggest impact, you'll see that the actual in the money calls, the money at risk, was fairly limited. So if you look at the impact of this particular expiry in money changing hands and people being happy or disappointed, the impact was fairly limited. But over time, so the next big one will be September or December. I expect these values to be bigger. So 100,000 contracts will become 200 or 300,000 contracts over time. And at some point, the open interest will no longer be at the far out of the monies, but will be the at the monies. And at those moments when open interest, let's say when 20, 30,000 contracts are within reach, you'll see volatility increasing, and there might be pushes of the market towards those particular strikes, being up or down. So what we didn't see now is what you could expect in the future is more volatility at big expiries.
Thank you.
So do you have any suggestions for the metrics? So for people to get a concept like how big the market is, how large would be the impact? Do you have any suggestions for the metrics so we can measure or try to observe with?
That's a tricky one. So I can only extrapolate our current growth numbers. I can assume what open interest will be at some point. But I think you're mostly interested in the impact on BTC and not the size of our open interest position. So that's impossible for me to predict, and there might be others better equipped to do so. But the inflow of new capital resulting in where BTC will be at which point in time, it's if I would know that, I wouldn't be in this call.
maybe data company like Skew can predict. Looking at data.
If you want some beautiful analytics and dashboard about this, you should pull up Skew. Skew has a beautiful platform. It's almost all Deribit options anyways, but it's got a beautiful platform that shows a lot of key, well broken down points. I think they do a really good job, and Emmanuel can talk more about that, I think.
Yeah, I mean, I can ping you after this call, Jason, and just walk you through the platform, but we track those stuff very closely.
We use it a lot, so this is our own metrics, because it showcases the entire market and not only Deribit. So it's very important to us as a platform.
But Jason, just to answer your question as to about the OI at expiry with regards to impact on Bitcoin, I think there is no direct impact on Bitcoin price from a large OI, and I think from the last expiry you actually saw spot volatility reduce due to the large OI, because you have guys who own the options and they will be trading the delta around it. So actually spot volatility reduced because of that. So, but at the same time, sometimes you might have spot volatility increasing because of it, due to hedging behavior. But to answer your question, I think many people ask this question as well. There is no actual direct impact from a high OI.
Yeah, I mean the quarterly expiry usually, unless something unforeseen occurs, usually it's quiet. Like that's most of the time. So last week was very quiet. I think one of the stuff that I was looking at is, because all the open interest is on Deribit, or most of it, was the amount of futures trading. Like you would assume that the people that are trading the options and delta hedging the Deribit options would hedge with some Deribit delta futures or perpetual swap. I guess the problem is that Bitcoin didn't really move, so no one really had the occasion to delta hedge. But one of the things that we were looking at in terms of impact is actually Deribit kind of volume compared to maybe, let's say, like a combination of BitMEX or OKX, and see if there is some spike on the expiry, which could highlight some sort of delta hedging activity. Because Bitcoin didn't move, we didn't see that, but I think that would be a way to gauge, if there is some pinning that's caused by options.
Nice.
But I think for this particular expiry that happened, the story was, at least for us, the story was pretty clear. Like last month or a month ago, when the Paul Tudor Jones news came out, you saw a surge in call buying on CME. So a lot of guys were buying calls, speculating they will go higher above 10K and break above 10K permanently. And what happened towards the expiry is a lot of these calls didn't get rolled forward. So there were guys speculating that Bitcoin would go up. And like Emmanuel said, it broke 10K but didn't stay above 10K. And what happened is a lot of these guys let their calls expire, or they're selling their calls. So what happened into the expiry, 2 weeks into the expiry, we had Bitcoin price dropping towards 9K. So, I think every expiry is different. I think that was the story for this one.
Also, if you look at the strikes and the OI, the various strikes, the difference between Deribit and CME. CME's open interest was at higher levels. So I think the chances for any move due to Deribit open interest were higher than CME. They were simply out of reach. So I think there could have been some activity. If prices would have dropped below 9K or above 10K, there would have been some momentum for what Emmanuel said, like futures hedging. But yeah, now it was essentially boring and out of reach for CME.
Okay, thank you. Luuk, maybe you may ask your question.
Yeah, I have a question for Ethan. So if you look at institutional money entering the space, as just mentioned, personally I think it's still small, but over time it will get bigger and bigger. Is there a chance that this results in Bitcoin being a more holding investment asset versus a currency? And if so, I expect transaction activity, velocity of Bitcoin to go down, and therefore transaction fees and potential income for miners to go down. So in an exaggerated world, if the space is only occupied by holders of BTC without trading, without using it as a payment currency, what is the impact of this trend to the mining space, do you think?
Yeah, I tend to agree that we're still in early days for institutional adoption, and that we'll probably see another couple cycles where retail plays a large role. So I think this is probably a bit out in the future, but I do agree that a large entry of institutions will kind of reduce the velocity of the money, basically, due to their preference on static sources of liquidity and, holding the asset. So I do think that will reduce a lot of the, on-chain volume, especially if these large institutions all gather together at a single venue, and they start trading, within Fidelity or BlackRock or something like that. When these institutions, do take a majority role in Bitcoin and they are preferring holding versus trading, that will reduce I guess immediately will reduce transactions in Bitcoin denominated basis, which will definitely have a negative impact on miners, especially because transaction fees are becoming an increasingly important part of the miner revenue as block reward goes down. Would tend to be a bit more optimistic though on the impact that will have, kind of the reverse effect. So if we do see this large institutional adoption, then I think there'll be a lot of other use cases that come through it with Bitcoin, and a lot of new players will enter the market and start driving up transactions, beyond these institutions. And then I guess the second part would be if they do come in a big way, I think that should have some positive impact on price appreciation of Bitcoin itself. So obviously miners, they pay their expenses in fiat, whether that's USD or RMB or Canadian dollars. So at the end of the day, they really look at that fiat number when it comes to selling their hash rate. So if you can see a large run up in price due to institutions, I think that could offset some of the pain. But Luuk, I think it's a fascinating thought experiment as we head into an era where block rewards decreasing, transaction fees are vital to the security of the network. So I guess we'll have to wait to see, but I'm optimistic something will shake out here.
Thank you.
Good, thanks.
Thank you, guys. Thanks. I think thank you guys for this. You asked me. Before I don't even have to start the session. You already start to ask each other. Thank you very much. So next, I think we were going to moving on to the Chun closing discussion. Chun, now it's your turn again.
Okay, it's So I think the trust, credibility, and reasonability is quite extremely important. So especially in the new tech and the financial sector, and Ep2 and Poolin, we are mining pools, and our hash rate real, and we are top two. So when it comes to finance, I think we are very cautious, and trust is everything, and how you build credibility, manage risk, especially when crypto price,
so volatile.
So that's it.
Yeah. Plus BTC.com, top 3 mining pools. Sorry, guys, you can answer.
What do you mean?
No, I said plus BTC.com, top 3. We're the top 3 mining pools.
I think okay, Bitcoin Cash is Bitcoin, right?
Yeah, so I think trust is really very important in this financial sector. So, so maybe guys, you can share a little bit about what you think. Maybe Kyle. So you Kyle, you're mute. Kyle, you're mute. Because you borrow,
right, there we go.
You know this very well. How who can trust you? How do you build your credibility?
That's a great question. And I think that is of paramount importance after that March move. It's been important all along, but people realized it on that day. And I think there's a couple ways you can do it. One, and basically it just comes down to a credit analysis, right? So the one thing you can look at is regulation. Is your counterparty regulated? And all regulation is not equal. A money lender license is very different than a hedge fund license, which is very different than other kinds of regulation. So that's one, and the jurisdiction. 2 would be balance sheet. How big are they? I mean, are you lending against someone that's got a small fund or a big fund? 3 is how long have they been around? Credit is lending in a sense, in the same way that Bitcoin is lending. If you've been around for 10 years, you're more likely to be around for the 11th than if you've been around for 1 year. And then maybe the 4th would be relationship. It's important to build relationship because the more you know someone, the more you can do with them. And a business is 2 ways. That was kind of my original point, or my original question to you, Chun. I really do think, there are things that maybe we hope that we can do more with you, with borrow and lending or other financial products. But one of the things that you said that really means a lot to me is all of our business are long Bitcoin. basically. Whether you're an exchange like Deribit that earns their fees in Bitcoin, or you're a lender like me that our book will have more business if there's Bitcoin. Well, you were earliest, and you had some of the strongest principles, and because you had those principles, you now are still in the game. Whereas some guys maybe would have blown up or lost their money or whatever else. And I think that's really important. So that's something that I'm going to take away from this.
Mm-hmm. What do you think, Luuk? Exchange counterparty risk as well.
It's an important one. So mid-March, it wasn't. I think I slept like 1 hour or half an hour. That particular day was I think a wake-up call for the entire industry. Part of the reason for launching Tether as well, because when markets are crashing, some people call it the death spiral and other nice phrases. But if collateral is crashing, it results in a lot of panic in the market. So we had to assess the way forward as well, and how to treat certain clients and liquidation and improvements to the liquidation algo. And we're also considering our portfolio margin model, so what to do for options liquidations, for example. But it's very important, and the bigger the industry becomes, the bigger the counterparty risk might become as well. So as an exchange, we have to protect ourselves, and we have to have both strong logic as in our algos, so in our system, as well as balance sheet, so improving the size of our insurance fund.
Okay, thank you. Daniel?
Yeah, I think to add on after Luuk's comments and Kaio's, I think for the way we look at it is there's three things that matter for a platform to be able to get trust, to be trustworthy. Number one is the reputation and where you're coming from. Number two is how you manage your risk management, how you manage your risk. And number three is how do you manage the security and safety matters. I mean, the number one, number three is hard to explain, but I think and also it's a lot of people, everybody's saying that we are safe, good reputation, but the second one, the risk management part, is often the overlooked one. Which we take a lot of efforts on it. We build a risk management team, or from people from ICE, from CME, from Goldman Sachs, from Ant Financial, and we model the liquidity risk, market risk, credit risk, all of them. And it's a lot of resources to spend on. It's not typical in Chinese crypto world, but we think that's how financial business will build upon, and we think it's very important. And the days like the 312. It's going to happen again, and those will become the days where you differentiate from a legitimate platform which can thrive for long term, or the ones that can only thrive for a short period of time and get blown up. So I think it's a very good question, and we take that really seriously.
Thank you. What do you think, Qian?
Me, right? Oh, sorry.
Qian. Yeah, Qian.
Sorry to interrupt. But I think I have something to add.
Oh, no, sorry, Qian, you add first then.
In Bitcoin's world, like the crypto, like the philosophy is not trust, it's verify. So when people say don't trust or verify, so we're talking about verifiability. And
International calls.
Oh, I'm sorry. Yeah, keep it going, please.
Okay, sorry, Qian.
Let me go up. Yeah. Actually, I think for building the trust in this very chaos era, in this very chaos industry, without any regulatory and without any license, I think we may start as we may try to play different roles separately. I mean, you can play like the credit agency, and you also play the asset manager. So from my point of view, I think for us, mining pool, we at least at at one moment that we take the Bitcoins gathering and we distribute. So we are kind of born as a credit agency. As when we can continue playing this role in the financial area. So that's why that's what we what we do, and what BTC.com and Matrixport we all do the same thing, because we want to build our trust, build our credit, and share the credit to market, and yeah, that's all.
I think like for a lot of investors in China, they probably have to ask themselves like where the trust comes from, why you can trust these institutions like Daniel mentioned earlier, like reputation. But reputation has to be built on something, like Poolin mining or Big Man, the mining pools. You already got something very solid there, so it's very easy to see, your hash rate there, everything's real. But for some other kind of institutions or financial service providers, I guess for a lot of investors in China, like a lot of them, they probably do not ask. If they go to the office, if they see the very big fancy office, they thought, oh, this is the company that I can trust. But they don't even know how to do a due diligence. No mention to regulations or hire a very professional team, experts, traders, whatever. Because for a lot of people in China, it's still very early, a stage for them to understand the finance idea. If you ask them to do due diligence, for example, they don't know how to do due diligence. The simple way to do due diligence probably is to ask someone they already know. Like, do you think we can trust this company?
That's why people need trust. They always run to a big fancy office, and you see all the banks, all the traditional big guys. They are the best and most fancy building, and you can see their logos, high in the sky at the top of the best buildings in the city. But it's not crypto. Crypto is not about trust. So when people talking about that, people need to earn trust, but people didn't recognize that. Okay, I'll give it back to you.
So what I was trying to say is like people do not understand in the market. Like for example, Kyle mentioned it. Are you a regulated financial service provider or not? Because the regulation to try to make your business regulated, and also Daniel mentioned risk management, to put all the effort and the cost to do a better risk management. That costs actually much more than have a fancy office, for example, or a very great marketing. So. Yeah, but anyway, that's just my point of view. Yeah, I don't know if any of you guys would like to add something more.
Maybe just to add to these points. I mean, of course, all these points are very necessary: licensing, custody, and reputation. I think the way we manage it and our product is a bit more high touch. It's mostly on chats with all our clients. So I think one way that we try to do this is part of it is education as well. So, if anything happens, you are directly engaging with them, speaking to them, explaining what's happening, explaining what the product is, and explaining the risk management as well. Like, how we're controlling the leverage and how we're controlling the margining. So, I think, because it's such an early time in the space for derivatives, I think, speaking directly and directly and comprehensively engaging is quite important as well.
Yes. Chun, do you still have anything to add? Or any of you guys still have something to add? Maybe Jason.
That's okay.
Yeah. I think it's just too hard to earn the credit, because for big mining pools, we do have a lot of hash rate. I think that's we have some natural customers from just by people looking at the ranking of mining pools. They always tend to choose the top mining pools. That's just the natural confidence. You feel confident about mining pool, you got trust. But for financial firms, I think especially in Chinese market in China, people are not quite familiar with some foreign financial firms. It's really hard to have a bootstrap.
Yeah.
People have to know these people and know your business. And even for Matrixport, we do have a lot of connections. We have customers shared together, but people still don't quite familiar with Matrixport, even if they are miners. So I think it's still a long way. It's still a very long way to go.
Absolutely.
Because a lot of people lost coins in different kind of situations with different financial firms. So that's you have to earn the trust from the beginning.
Long way to go. But we're still young, so we're good. Thank you, guys. So let's work together for a better future in this crypto. So any good news or anything exciting to share with our audience to end the show tonight? Darius?
Yeah, I think this market is a lot of opportunities. I mean, as much as Jason is saying that there's a lot of trust issues, legacy issues, the market's a lot of opportunities. And I think it's really worth checking it out before the institutions start to come in and pick and start to equalize these opportunities. DeFi has a lot of opportunities. Like Kyle said, as a specialist foreign lending guy, they offer a very good product as well. So and options, tons of opportunities on options. So with the whole world in negative interest rate territory, crypto is one shining pool where the risk reward is actually the reward to risk ratio is actually very high. So I think it's very, very worth taking some time to explore and educate yourselves on crypto derivatives as an investment class.
Thank you, Qian. Anything new products to share with us?
I don't know, what is new. Okay, in Blockin wallet, we are trying to build a one-stop app for miners and to facilitate their financial demands. So lately we have connected with CyberX, a seasoned trading firm, and some talented guys that connected with them, and they will help us to facilitate our trading using their algo to provide better prices in execution, and so I think it's good news. Anyway.
Thanks. So if I was a miner, should I use a Blockin wallet or Matrixport, or maybe both?
Thank you.
Daniel, what do you think?
I refuse to answer this question.
Both apps. I think it's more important that we are united, to build the market bigger. Yeah. And Luuk?
Absolutely.
Luuk, do you have anything to add?
Yeah, very briefly, what's coming up on our end, we're launching something which we call market maker protection, which is really like a niche service for market makers in options, where we automatically pull orders in certain scenarios. So if more than a certain number of contracts or deltas are traded, we pull the orders as a safety precaution, which we think might help to improve the quality of the market. So tighter quotes, bigger size. So it's an important milestone, but not for the bigger audience, but for like niche players. But it will help the bigger options arena. And secondly, as already mentioned, we're planning to launch Tether futures. So a range of altcoins as well as BTC and ETH, but then using Tether as collateral. We're looking into VIX, so implied vol futures, which is like a really important hedging tool for a more mature market, and I think we're almost getting there. And lastly, we're about to announce a new partnership in Asia, which is in line with our copper integration, like custody integration, but then with an Asian firm, which is really interesting solution for clients, retail hedge funds, market makers, etc., to keep their assets with their trusted custodian instead of depositing them directly with Deribit, which is preferred by a lot of clients of theirs. So all to happen soon, hopefully.
Wow, exciting, many good news. Thanks. Jason?
Hey, I was mute?
Yeah, you were mute. Yeah,
you're good now. Yeah.
Okay. Oh, sorry, what's the question?
No, just I think you have a new products to launch, no? would you like to share with our audience? Smart.
Oh yeah, actually it's smart pool. Yes, we start cooperation with Matrixport. So if you bind your key with Matrixport, you can automatically sell your coins. So and then from mining pool side, we just switch your hash rate to the most profitable coin between BTC, BCH, and ESP. Yeah, but actually this business is quite.
Chun is not very happy to.
Yeah. Really? Yeah, I know. I think Ep2 is the only pool which is not mining BCH. I guess.
Yeah, someone commented on my Twitter account a few days ago, like BCH is like the tea lady in the crypto world. I can't agree with that more.
Okay.
Yeah, but I think for the mining pools, we just list the coins as our miners needed.
You just sell the miners. Miners
no,
needed. Miners even need a Filecoin these days. Every miner probably is asking about Filecoin.
Actually, as a mining pool operator, we're trying to keep away from all these debates, and we're trying to be neutral for all the communities. That's but I mean, for the years, all the pools have been dragged into all the debates, and we are always in the center of the topic. So that's actually not mining pool one. We want to give the power back to the miners.
Yeah.
So I think maybe we were more looking forward to decentralized mining protocols. So maybe allow miners to select their transaction, build their own blocks. That should be much easier to run a business as a mining pool.
Thank you, Jason. Kyle, Emmanuel, do you have anything to add?
Sure. Crypto options are 1% of the derivative market. Options in every other asset class, FX, commodities, equities, is 60 to 70%. We're early. We're still early. Crypto options are still super small. They're going to start developing more. There's going to be new products. Luuk just mentioned a bunch. There's going to be exotic options. There's going to be tons of stuff. So we're all early. We should all get more involved.
Luuk and Kyle, you both have to be more, show yourself more, a little bit more in the crypto in China. So the people here know, we need to trade more options. Not just the futures on OKX or OP, but Deribit options. Thank you. Emmanuel, do you have anything to share with us? Anything exciting from your side?
Yeah, I mean, thanks for having me today. We rolled out today a new dashboard. We are working with the OKX team right now, and we've launched recently a hosting service where we build dedicated dashboards for exchanges around derivatives. So that's been received well. So that was like the flavor of the day on our side.
Thank you, guys. So thank you, guys, for being here to talk to Chun. I hope, Chun, after tonight, your acceptance for the crypto finance will increase from probably 5 score to maybe 7. That would be good for us.
I think maybe I can date a tea lady because it's never try, never know.
Thank you, guys. Thank you. You have a good night. Thank you, guys. Thank you for your time.
Bye.
Thanks. Bye.
Thank you. Bye.
Thank you, everyone. Have a good night.
Good night. Bye.
Thank you, everyone. Bye.